go ahead and let's jump into it. So the three things that you need, let's just start off by putting 1, 2, 3, okay? So three things we're going to need as a trader. Now the first thing is simple, okay, and it's price action. Price action rules. And the reason why I underline the word rules is because literally it does, okay? Price action is so important in the market because it really tells you what's going on. Now you need to train your eye to look at any chart and just know based on price movement previously what you're looking for in the future. It's the only way you can factually understand where in the market there are buyers and sellers and what in the market is a good and a bad price. The only way that's going to happen is by price action. So that comes under the candles on your chart and different price zones and what they look like to you once your eye is trained. Now secondly, you need something called risk management. Now, I know the word risk management or the words are thrown around all the time, okay? And it's simple, really. Risk management is key for any trader because at any time you need to know exactly what lot size you're going to have for any trade, tied to your capital, how big or small your position is going to be based on that market value and the further rules that we were talking about, and how you're going to manage your trading accordingly based on your drawdown at any time. In other words, how much loss you've accumulated in open positions, because you're going to be able to use hedging methods to get rid of that loss and pretty much put you in profit so you can keep going over and over again. So risk management, extremely important, because without that you don't have a trading plan, and it comes under what size am I going to trade at any time based on where the market is, and the third point, which is market sentiment. So let's write that on the board. Okay, so market So there you have it along the bottom, market sentiment. Why is that important? Well, market sentiment is important because at the end of the day, all of this goes on, the market moves in line with what's going on around the world. If there's good news or bad news, it's going to move the market in any kind of direction. Now, lots of people get this wrong because they wait for news to come out and they'll put a trade in or a series of trades before that news and they're guessing what's going to happen. You just need to be in line with market sentiment and the overall mood of the market, and then you'll be more or less okay? Because if you're guessing what news is going to do, you're always going to be playing a guessing game and you'll always be behind. You need to use market sentiment rules so that you can track market sentiment all the time and be trading in line with it and trading before it changes in the right way in accordance with the other rules as well. So there's three quick rules, guys. Loads of stuff we go over inside Will of the Trader, a large video series and more recorded private analysis for members too. Get on board today on this page.